The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Happy Thursday, everyone. Welcome to another edition of Breakout Investing on TFNN. My name is Ken Shreve. Thanks very much for tuning in. If you want to give me a call, as usual, Tuesdays, Thursdays, 3 to 4 p.m. Eastern, you can hear my show. The number to use is 877-927-6648. One more time, 877-927-6648. We can talk about this market. Don't forget, you can get my show as a podcast on iTunes. Very easy that way. And you can listen to all TFNN programming on your smartphone. Just type in tfnn.mobi, and you can listen to the stream that way as well. I'll be going over some charts on the show today, whether it's the NASDAQ, individual stock charts. If you want to look at those charts right along with me, you can do that on Tiger TV, right on the homepage of tfnn.com. The show is live on Channel 1, and then it is archived on Channel 13, and of course Tiger TV is also viewable on your smartphone now, Android device, iPhone, whatever handheld device you have. So let's take a look at the markets here. Another orderly decline here. Volume on the NASDAQ tracking pretty close to what we saw yesterday. NASDAQ volume yesterday was below average at 1.5 billion, anemic volume again. Today tracking pretty close to that level, maybe even a little bit below 1.5 billion. Volume on the New York Stock Exchange yesterday also below average, around 725 million. Looks like we could see higher volume on the New York Stock Exchange today. So if it holds, if volume does come in above that 725 million level we saw yesterday, it would be another mild distribution day or higher volume decline for the S&P 500, for the NYSE composite. Headed into today, we had 5 higher volume declines on the NYSE composite, just 3 on the S&P 500, and 2 for the NASDAQ. So this is an issue in the market. You know, I really just kind of look at it as mild distribution at this point, because when you're gauging market health after a big run, you want to pay attention when distribution days or higher volume declines become prominent. I would not say they're prominent now. They're out there, but it's going to take a lot more than 3 on the S&P 500 and a lot more than 2 on the NASDAQ to cause serious problems for this rally. Let me go ahead and refresh the NASDAQ composite here chart. We'll put that back up in Tiger TV. See that the NASDAQ right now is down a little more than 18 points. That's 0.6% to 3,056. It's obviously still holding above the 3,000 level. You see the NASDAQ. I've got three moving averages plotted here on the chart. The blue line is the 10-day moving average. That's at 30.45 thereabouts. The NASDAQ is trading just above that. Underneath that, you got the 20-day moving average right around 3,003. And then below that, the 50-day moving average all the way down at 29.12. And I've been saying in recent shows it would be not surprising at all to see the NASDAQ eventually, pay a visit to its 50-day moving average. That would be a correction of about 6% or so. Completely reasonable, considering the tech index is up 20-25% since December thereabouts. So that's 29.12 is quite a ways below where we are now, but I think that it will eventually happen. But yeah, market clearly has shown us that it is resilient, and not to mention the fact that you've got a lot of stocks out there that are not showing any signs in the way of breaking down. A lot of individual growth stocks out there holding above key support levels as well. So let's take a look at the S&P 500. Again, we could see a distribution day on this index today. Volume is tracking a little bit higher on the New York Stock Exchange, but the S&P 500 right now down close to 12 points, 0.8%, 0.9% decline to 1391, so it's below that 1400 level, which is definitely significant resistance at this point. For the S&P 500 to truly break out over that 1400 level, it's going to need major amounts of institutional money coming in from the sidelines, and we've seen a little bit of it between in December, January, February, some money coming in from the sidelines. But I think for the S&P 500 to truly break out over 1400, it's going to need volume of at least 2 billion shares, preferably more than that. So S&P 500 trading right now a little bit below its 10-day moving average. You can see that its next level of support would be the 20-day moving average at 1379. It's only about 11 points from the 20-day moving average, and then below that, the 50-day is at 1350, thereabouts. So wouldn't be surprised at all to see the S&P 500 pay a visit to its 50-day moving average as well. When it comes to the overall market, the market seems to be, getting more and more tired. Leading stocks are holding in there just fine. I'm really, at this point, we are still seeing a limited number of technical breakouts in heavy volume. We'll go over LinkedIn and Western Digital, two recent heavy volume breakouts in the market, even though LinkedIn's price action yesterday was a little disappointing. Sellers came in late. But really right now, what I'm more looking at is not so much buying base breakouts, but sort of just kind of biding time and waiting for this market to pull back before I start putting my foot on the accelerator again when it comes to my Ultimate Growth Stocks newsletter and model portfolio. I suspect what's going to happen is a lot of names are going to just on weekly charts are going to pull back to their 10-week moving average, and we'll go over some of those names I'm going to be watching. I think the 10-week moving average in a lot of cases could prove to be a support level for a lot of these, fast movers that have been running higher for 3 months now. When the market does pull back, they'll correct too, and I suspect many of them are going to show good supporting action at the 10-week moving average. So we'll take a look at some of those names in a little bit. Why don't we take a look at shares of LinkedIn? The stock is outperforming at last check. I haven't checked it recently, but shares of LinkedIn up close to 2% today, $1.71 to 99.49. You can see its price action yesterday. It gapped up. It broke out over the swing point of 96.31, but it did finish near its session low. So sort of disappointing action on the breakout day. Nice to see the stock outperforming, buyers back in there. I think it was Goldman that gave the stock an upgrade yesterday, but profitable company, LinkedIn, good top-line growth in recent quarters, and good heavy volume move yesterday, even though it did close near its session low. Stock is outperforming today. So that's one decent recent breakout. Take a look at some IPOs. Two IPOs today. Marketing software maker ExactTarget. It's ticker ET, and the chart's going to look kind of funny here because today's its first day of trading. But I think we'll be able to get a chart here for ExactTarget. The stock is up 29% today, $5.56 to $24.56. Again, it's a marketing software firm. The company priced above its expected range last night. It priced at $19 a share. So again, up $5.56 from that offering price to $24.56. So good first day of trading for ExactTarget. And let's also take a look at VanTV, VNTV on the NASDAQ. That stock's also having a good day. This is the former payment processing unit of Fifth Third Bancorp. That's a NASDAQ-listed bank that trades under the ticker FITB. But VanTV is the former payment processing unit of Fifth Third. It priced 29.4 million shares last night in the middle of its range at 17. It is up $2.49, close to 15% today to let's see here, 19.49. It priced at 17. I think I said it priced at 17 last night. Now at 19.49, up $2.49. So a couple of good IPOs today. I mentioned on my show I typically don't like to jump on these IPOs during the first few days of trading. I would much rather wait for a base to form. Like to see the enthusiasm die down. Need time to really kind of examine the growth prospects for a company like ExactTarget. Not even sure if they're profitable yet, but company that is showing accelerating sales growth, and you've seen that a lot in recent new issues. Whether it's a company like Groupon or Yelp, you see a lot of good top line growth, but some of these companies still not quite profitable yet. LinkedIn is the exception. Like I said, it's been running profitable for a while now. A couple more IPOs expected to price tonight. BATS Global Markets, that's going to trade under the ticker BATS. They basically operate electronic markets for equities trading, options trading in the U.S. and Europe. BATS is the third largest exchange operator in the U.S. behind NYSE, Euronext, and NASDAQ based on market share. But BATS, B-A-T-S, is expected to price between $16 and $18 a share. That should happen tonight, first day of trading tomorrow. And another IPO set to price tonight. This is a China IPO, VIP Shop Holdings. They basically operate a discount online retail website that's going to trade under the ticker VIPS, V-I-P-S, expected to price between $8.50 and $10.50 a share. So two IPOs expected to price tonight. Checking in on crude oil here at the New York Mercantile Exchange. Crude for May delivery fell $1.92 or 1.8% to finish at $105.35 a barrel. And the growth concerns out of China basically weighing on oil prices here, but not a precipitous decline for oil, but down 1.8% today to $105.35 a barrel. And let's check in on some of these. It wasn't that long ago that some of these oil and gas producers were looking pretty good. Good growth in this industry group. I've been keen on EOG Resources, but look at the stock today, taking out its 50-day moving average. Really, when a stock does that, it's probably going to base for a little while. So I don't like to buy on the way down like this, even though it is, this is a $120 stock not that long ago, now trading around $110 a share, but below its 50-day moving average. Looks like it's ready to base and consolidate gains for a while. Shares of EOG right now underperforming broadly, down 3.4% to 109.96, and a lot of other groups in a lot of other stocks in this group under pressure as well. Pioneer Natural Resources also takes out its 50-day moving average today, down 3.25% to 99.90. Former holding in my model portfolio that I recently sold took profits in Continental Resources, down 2.7% to 85.23. Still holding above its 50-day moving average, hasn't completely broken down yet. Folks, we'll be right back. You're listening to Breakout Investing on TFNN.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. About 35 minutes left to go in Thursday's session. Dow right now down about 96 points to 13,028, trying to hold that 13,000 level. The S&P 500 underperforming, down 13 points, 0.9% to 1390, below the 1,400 level, and the NASDAQ hanging in there okay, down 21 points, 0.7% to 3,054 thereabouts. Mentioned volume on the New York Stock Exchange tracking a little bit higher than the below average level we saw yesterday, so we could see another distribution day added to the count in IBD's big picture column. And again, mild distribution in the market at this point, but as higher volume declines start to become more prominent in the major averages, that's worth paying attention to. So you've got mild institutional selling in the major averages since mid-February, about that point, but all the while not much damage at all done to leading stocks. Before we went to break, talked about weakening oil prices. That has spilled over into the exploration and production group, a subgroup inside the oil and gas sector that houses many stocks with outstanding fundamentals, good bottom line and top line growth in recent quarters, but mentioned names like Pioneer Natural Resources, EOG Resources, breaking below their 50-day moving averages today, and Continental Resources, I believe, which is still up in Tiger TV, trying like heck to hold above its 50-day moving average. Taking a look at gold today, April gold fell $7.80, 0.5% to end at $1,642.50 an ounce. That's the lowest settle since January 13th, I believe. And let's take a look at GLD, as we normally do when we quote the gold price. GLD right now is down 57 cents, almost 0.4% to 159.64. It is trading up near its session high. The GLD hit an intraday low of 158.13, but again at 159.64, trading up near its session high. Volume is on pace to be quite a bit higher than the low volume gain that was seen yesterday when it finished near its session low. So that's a look at the GLD, and let's take a look at Randgold Resources while we're talking about gold here. GOLD on the NASDAQ. Boy, this stock really getting crushed today, down $12.37, 12% to 91.03. Clearly a stock that has been technically acting weak for several weeks now. But the story with Randgold Resources, there's a military coup in Mali where the miner has significant operations, so there are concerns about a disruption of operations in Mali. We'll see how that plays out in coming days, but Randgold Resources under quite a bit of pressure today. Economic data pretty quiet today. We got a reading on weekly jobless claims earlier today. They were down, or I should say they fell 5,000 to 348,000. Really no issues at all with jobless claims recently. This was another better than expected number. Economists were expecting a slight increase to, I think it was 354,000. So an unexpected decline. We'll take it. Now down to 348,000 for weekly jobless claims. Coming up tomorrow, we've got new home sales data for February. Housing data this week mostly mixed. Remember, we had housing starts on Monday that were a little bit disappointing, but building permits hit a multi-year high. So the building permits earlier this week on Monday were pretty good, and then we had existing home sales yesterday that they were kind of middling, not great, not bad. But the home builders continue to be a pretty nice pocket of leadership in the market. Let's check in on the ITB. This is an ETF, the Dow Jones U.S. Home Construction Index Fund. It's a little bit below its 10-day moving average right now. It looks like a key support level for the ITB is going to be right around $14 a share. It is underperforming today, down 1.8% to 1478, but still has a ways to go. You can see the 50-day moving average was pretty good support for ITB back in early March. So if it does eventually pay a visit down to that support level, let's see if it finds support again. All right, folks, when we come back, going to go over some earnings report. Earnings from FedEx today, Dollar General, Lululemon. Nice quarter of growth there again. We'll do that when we come back. And don't forget, you want to check out a free trial to Ultimate Growth Stocks, my weekly newsletter. You can do that right on the homepage of TFNN.com. Just click on the Newsletters tab and then Investment Newsletters, or you can just go to KenShreve.com. We'll be right back, folks.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in the equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing. Ken Shreve with you every Tuesday and Thursday from 3 to 4 Eastern on TFNN. Thanks very much for tuning in. About 25 minutes left to go now in Thursday's session. S&P 500 underperforming, down 12 points, 0.9% to 1391. Dow Jones is next, down 91 points, 0.7% to 13,033. Still trying to hold that 13,000 level, and the NASDAQ still relatively muted, selling pressure in the tech index. Volume right now on pace to come in lower than what we saw on Wednesday on the NASDAQ, but the tech index right now down 18.6% to 3,057. Taking a look at some earnings reports today. Take a look at, probably one of the highest quality discount dollar retailers out there. Dollar General having a good day today. It is off its session highs, but Dollar General up 3.1% to 46. 46.14. Pretty decent volume. Company reported a 38% rise in quarterly profit to 87 cents a share. Nice acceleration in sales growth at Dollar General too. Rose 20% from a year ago to nearly $4.2 billion. Had a recent breakout for Dollar General. Here was your swing point over here in February. This high right here looks like it's just over $43 a share, so a little bit extended at this point. That is a big issue in this market right now. I've been talking about the fact that the crop of technical breakouts has been getting smaller and smaller and smaller, and that really stands to reason, since most of the market's breakouts, we had that follow-through day for the NASDAQ back on December 20th. That was the buy signal. That was the time to start, moving from cash and start dipping your toe in the market. And really, right around that time, late December into January, is where you started seeing the big leaders breaking out left and right. In some cases, very heavy volume. In some cases, volume wasn't great, but there was a steady diet of technical breakouts. Now that we're 3 months into this rally, what you have is a lot of extended stocks. And not much in the way of new breakouts. I mentioned LinkedIn broke out yesterday. You had let's take a look at Western Digital today. This was good solid heavy volume breakout. Needham out with positive comments about the hard disk drive maker. Western Digital earlier this month acquired Hitachi's drive business, and a lot of positive chatter about that. So shares of Western Digital, nice breakout in heavy volume today, up 6.6% to 42.04. So by and large, the crop of base breakouts or technical breakouts is getting smaller. So at this point, like I was saying, I want to look at some of these stocks that have a good chance of pulling back to their 10-week moving average and finding support. So I would take a look at shares of Under Armour. Okay, you see shares of Under Armour today. Down only 15 cents, 0.2% to 97.50. You look at the daily chart of Under Armour, and it's clearly an extended stock. You had a breakout over 87. Now it's at 97, so it's $10 above the swing point. But now let's look at the weekly chart for Under Armour, and I want to show you where it is relative to its 10-week moving average. Okay, so here's the weekly chart for Under Armour. I suspect if the market continues to pull back here, Under Armour's 10-week moving average is at 86.27, which basically coincides right where its last swing point is, and there's a lot of stocks in that position right now. Okay, so that's when the market does pull back, you get a 2% pullback in the NASDAQ. You get some of these high growth names like Under Armour. I mean, you know who the high growth names out there. They're going to correct 1.5, 2.5 times at least what the market does. So Under Armour, a candidate to possibly eventually pull back to its 10-week moving average and find support. Herbalife is another big leader out there. Another stock that's extended in price. It's down 1% today to 70.36. But let's take a look at a weekly chart for Herbalife. I think I have one. There it is. Okay, here's the weekly for Herbalife, and you'll see the stock, trading around $70 right now. Its 10-week moving average, I should say, is at 63.71. So that'd be a pullback of 6 or 7 points from its current level. I think that's really the key right now. If the market pullback stays contained and we don't see an unexpectedly bad headline from somewhere that just causes waves and waves of persistent selling, that fuels a pullback of more than what I'm expecting. Again, names like Under Armour, Herbalife, should be able to quietly come down to their 10-week moving averages, and there, if they do find support, if buyers come in there and support the stock, that's not a bad entry point. Let's look at a weekly chart for Coinstar. Coinstar, they have the red box DVD dispensers, and Let's find Coinstar here. Just really like the fundamentals at this company. Bottom line growth, top line growth, good management team that's executing a growth strategy here. But Coinstar, another stock. Currently trading around $60.89. Its 10-week moving average is at 56.45. So Coinstar isn't a huge leader, but again, a company with good fundamentals, a decent-looking chart. It certainly has been under accumulation lately. So don't be afraid to look at some of these leaders when they pull back, because when the market does pull back, it's going to take most every stock down with it, and some stocks are going to find support, others aren't. You want to be focused on the ones that show good supporting action at a support level like the 10-week moving average. Okay, just talked about Dollar General's earnings. Let's take a look at FedEx, FDX. I really liked FedEx's technical setup headed into earnings today, but stock's under a lot of pressure today, down $3.59, close to 4% to 92.23. Stock was getting into position for a possible breakout over a swing point of 97.19. That was its high set in mid-February thereabouts. But bottom line growth was pretty good, up 91% from a year ago to $1.55 a share. That was about 20 cents above what the street was looking for. Pretty good top-line growth as well, up 9% to $10.56 billion, but that was a little bit below the consensus estimate of $10.62 billion. So sellers in shares of FedEx today on a lukewarm earnings report. And let's check in on Lululemon, L-U-L-U. Lululemon, really strong day for this stock. Earnings were kind of lukewarm. I mean, this is a high multiple stock, usually held to a very high standard. I mean, the growth was there again for the yoga retailer. They earned 51 cents a share, up 59% from a year ago. Sales up 51% year over year to $371.5 million. That was a good beat on the bottom line and top line. This is a company which does it the right way. They tend to under-promise and over-deliver. Their guidance, not that great. It was decent guidance, but again, when you're a high multiple stock like Lululemon, the market usually doesn't give you much room. But stock hit an intraday low today of $70.88. Now trading up at $76.45, up 3.2%. So bullish day for Lululemon. Problem here is that you're not buying the stock as it's coming out of a base. So you had a breakout for Lululemon over what was it, $62 a share back in this area here. It gapped up. This was back in January, where the company issued pretty bullish pretty good guidance for the first quarter, and it gapped up there. That was the breakout, when it cleared that $62 price level. And then you can see it's basically been riding its 20-day moving average higher. So a risky buy up here. I think if you're buying Lulu at $76 a share, you're chasing it up here. So I don't own this stock. This is a stock that I actually took profits in. And maybe a little too early, but I booked a gain in Lululemon not that long ago. I'm going to say several weeks ago, but it used to be a holding in my Ultimate Growth Stocks model portfolio. But closed that position, took a profit. But not interested. I mean, if Lulu can form a base here, consolidate gains, move sideways, form a new base, that's when I'd be interested in revisiting the stock. But buying here, I think you're chasing it. Let's take a look at shares of RGR, a couple story stocks today. Sturm Ruger, this stock's having a monster day. Another good heavy volume breakout here, up 12.6% to 47.63. Sturm Ruger, of course, a manufacturer of firearms, handguns. They basically came out and said they can't meet demand. They stopped taking new orders due to strong demand. Sturm Ruger is a stock with a lot of positive qualities. It not only has strong technicals, but its balance sheet is fairly pristine as well. It has a market cap of $912 million, so it's a small cap stock, but sales growth has been accelerating in recent quarters for several quarters in a row, from 10%, 24, 38, 45% year-over-year growth. So demand very strong. Should be able to grow annual earnings 15, 20% over the next couple of years. Return on equity very high. So Sturm, Ruger, not just any old high flyer here, a company where there's a fundamental story that's driving the price performance. Its competitor, Smith & Wesson, that's SWHC. I consider a second-tier stock in the group, but hey, good technical setup here as well. Smith & Wesson holding up big today in heavy volume, 13.3% to $7.82. So it's a smaller company. Smith & Wesson has a market cap of $500 million thereabouts. But what's amazing about Smith & Wesson, though, is that they earned 17 cents a share in 2011 for the full year. In 2012, annual earnings are expected to be 27 cents a share. 27 versus 17 cents, that's a 59% increase. And then looking out into 2013, they're expected to earn 40 cents a share compared to 27 cents this year. That's a 48% increase. So big earnings and sales growth at these firearm makers. Another story stock today, let's take a look at Starbucks. Got to give this company credit. Starbucks has a market cap, I'm going to say close to 40 billion, but the company keeps innovating. They're branching away from coffee, and they're doing it successfully. Shares of Starbucks up another 2.6% today to $55.20. Yet another example of a stock that's extended. I think you're chasing if you're buying at its current price level. But the coffee giant revealed a new line of energy drinks today called Refreshers. They come in 3 flavors. Pretty tasty ones, it looks like. Raspberry pomegranate, orange melon, and strawberry lemonade. The energy drink is one of the fastest growing areas in the beverage market. Of course, Monster, MNST, they make the Hansen soda, Monster energy drinks. I mean, this stock has just been an unbelievable performer. Stock's up another 1% today to $60.98. Again, very extended here. You see the common theme here. A lot of growth stocks, very extended. It's the one thing that makes me nervous about this market, but one of the key buying strategies I use for my ultimate growth stocks model portfolio is I let the market tell me what to buy, and I let the market tell me when to sell. I rarely, in fact, I don't use a personal opinion. I don't listen to what people are saying, all the noise out there. I just let the market kind of guide my buy and sell decisions. And when I see a lot of extended stocks out there, the market is telling me to mostly keep my powder dry. Don't chase extended stocks. Don't buy extended stocks. That said, if the market serves up a heavy volume breakout every now and then, there's nothing. There's no harm in nibbling, even though we are 3 months into a rally. All right, let's check on shares of Visa here. Another stock that continues to look okay here. I mean, it's now it's kind of trying to hold its 10-day and 20-day moving average here. Wouldn't be surprised to see Visa pay a visit to its 50-day moving average eventually at 110, 111 thereabouts. Stock is up 55 cents today to 117.30, bucking the trend, but really like just nice sideways movement like this in the daily chart that you see here. But it is a stock that could be ready to base for a little while, move sideways, consolidate gains, and if selling does pick up in the broad market, again, wouldn't be surprised to see Visa eventually pull back to its 50-day moving average. Again, if it finds support in heavy volume, maybe not a bad opportunity to pick up some shares. And while we're talking about Visa, let's take a look at MasterCard. Another stock, similar chart, moving sideways. MasterCard up 56 cents today to $418.50. So Visa and MasterCard still hanging in there despite some selling in the broad market. We'll be right back, folks.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing Breakout's gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best-kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing on TFNN. Hey, let's not forget about the IPOs here. There's, the new issue market certainly is showing signs of life. We mentioned 2 IPOs earlier in the show, Exact Target ET having a good first day of trading, and also Vantive, VNTV. Successful debuts for those two stocks today, but several new issues out in the market that really deserve a closer look here. And they've been trading for a few months now in most cases. And let's take a look at Spirit Airlines, ticker SAVE on the NASDAQ. Fast-growing discount airline. Revenue in its latest quarter, in the fourth quarter, up 27% from a year ago to $274 million. Earnings up 57%. Good growth prospects at this company. Full-year profit expected to rise 50% this year, 27% in 2013. Stock that's still holding above its 50-day moving average, forming a new base here. Let's not forget about Michael Kors, KORS on the NASDAQ. Kors has just been a rocket ship. Tough buying up here, though. I would really still like to see this stock base for a little while. I mean, this is a company where quarterly same-store sales growth has been, running at 30-35%, something like that. But Kors right now trading in the bottom half of its range today, up 19% or 19 cents, I should say, to 48.82. Would like to see Kors digest its gains, form a new base here, but the company certainly has established itself as one to watch here and a potential emerging leader. And then there's another IPO that I wrote not too long ago about over at realmoney.com. Tango. Tango is a software maker. They make life cycle management software. Basically sees a product through from beginning development all the way to end development. But Tango having a big day today, up 9% to 1917, showing good technical action, big surge in trading volume. Tango came public in late July at $10 a share. Again, currently trading around $19. Excellent bottom line and top line growth at Tango as well. Let's check in on Baidu. Shares of Baidu have started to come back to life. Baidu right now up 2.1% today to 143.61. Baidu trying to get over I guess you could say a mini swing point here of 142.49. That would be its high set over in this area here, but decent volume over the past couple days. Another stock that technically doesn't look too bad here. Shares of Baidu up 2.1% today to 143.61. Coming up after the close, busy in terms of earnings. Hard to believe companies are going to be closing their books at the end of March, and first quarter earnings reports are going to start rolling in mid to late April. But after the close today, watch for earnings from Nike, NKE, another extended stock. I think you're chasing, buying up at current levels, but shares of Nike up 39 cents to 110.83 ahead of its quarterly results. Earnings expected to be up 8% to $1.17 a share. Sales up 15% to $5.8 billion. Also watch for earnings from Accenture, consulting firm ACN. Another well-run company here, great management team. Shares of Accenture down 21 cents to 63.54 ahead of its results. Another strong quarter of growth expected at Accenture. Earnings up 13% to 85 cents a share. Sales up 9.5% to $6.6 billion. Also going to be watching for earnings from Cost Plus, under a lot of accumulation recently. CPWM on the NASDAQ. Cost Plus reports after the close as well. Coming up next, the Tom O'Brien Show on TFNN. Be sure to listen to Tom. I'll see you back here on Tuesday at 3 Eastern for another edition of Breakout Investing. Have a great afternoon.